But why is hoping all they've got? Because there is no plan. Stagflation is the one thing that their tools don't work with, right? Because they can either fight inflation or try to stimulate the economy, and the tools, are opposite. So if there's too much inflation, what do? Well, they raise interest rates, or they do quantitative tightening, right? What do they do if the economy is weak, if the labor market is weak? They do the opposite of that. They cut interest rates and they do quantitative easing. Well, if you have a weak economy, rising unemployment, and rising inflation at the same time, the Fed's got nothing. You can't ease and tighten simultaneously. It's like you can't push and pull on the same thing because you go nowhere. So if the Fed gets stagflation, they're out of ammo. They got nothing, right? And in fact, earlier this week, I think maybe Thursday, not that early in the week, the Fed announced the results of its stress tests. It's every year they come out with these stress tests for the bank. And what do you know? The banks passed, right? They passed the stress. I think they passed them. But they did not test at all for stagflation. The most adverse scenario, right? This is the worst possible thing the Fed could think of. The worst case scenario was a recession where stock market went down, like real estate market went down, but inflation went way down and interest rates went way down. So wait a minute. This is supposed to be the worst thing that can happen. And in the worst possible thing, interest rates go down and inflation comes down. Well, why is that bad? Isn't that what everybody wants? Like, we got all this debt. Everybody is loaded up with debt. And the Fed is saying, imagine how bad it's going to be if interest rates go down. Well, wait a minute. That's a relief. We all want interest rates to go down. Certainly Donald Trump wants interest rates to go down. So according to the Fed, this would be a disaster. This is such a horrible thing if interest rates go down and inflation comes down. But wait a minute. Don't we want inflation to come down? I mean, it's been so high for so long. Why would inflation coming down be part of the worst case scenario that the banks are testing for? Because the Fed just assumes that if we have a severe recession, well, we're going to get rewarded with low interest rates and low inflation. Well, I can think of a far more adverse scenario than that one. And that's the scenario where we have a recession, but interest rates go up and inflation goes up. And in fact, it's because inflation goes up that interest rates go up. Now, isn't that worse? Why doesn't the Fed test for that? Why doesn't the Fed say, okay, all you banks, I want you to run a stress test and imagine the stock market goes down, the real estate market goes down, but interest rates and inflation go up. So run a test for that. The reason that Powell is not asking the banks to do that test is he knows that every single major bank will fail. If we have that type of scenario where we have inflation and recession at the same time, and the result is rising, not falling interest rates, that's it, right? Everything comes crashing down. And so that's the reason there's no stress test for stagflation. That's the reason that the Fed has no plan for stagflation. But that's why we're going to have stagflation. You know,